Hello, welcome to XUCPA channel. This is Charlene. Today I want to talk about a very important topic, which is what can you deduct? Of the 25 years that I became and practiced as an accountant, I have countless clients asking me simple question of what is deductible. Now, there are a few tips before I start this session with you. I would like to introduce you to our website. There's actually an expense reminder checklist that you can refer to that gives you examples, of different expenses that you can deduct. But I also want to take the time to clarify and to provide you further guidance. In fact, there will be an implementation guidance that will be launching so that you can use it as a tool to track all your expenses. So today we will talk about this topic. Now, what is deductible? The most important criteria that IRS has on regulation section 162A is it needs to be ordinary and it needs to be necessary. So what does it mean by ordinary? It's common, which means it is not uncommon. So an example is that if you have an insurance company, so it is common that you will have to pay, premiums for some of your clients to the other insurance company. If you are a doctor offices, you have to, order certain software to record your patient notes. So those are considered, ordinary. If you have accounting firms, you need to have accounting software. So accounting software is an ordinary. It's a very common expenses that business owners in the same industry will incur. Now let's talk about necessary. Necessary is something called appropriate or helpful. So it's an expense that you cannot do without. So obviously what is necessary for one industry may not be necessary for other industry. So let's look at situations where you're unsure whether these expenses are actually deductible or not. So I'll give you some examples. You decided to go out with a friend, but 2 hours into the conversation, you suddenly realize that your friend started a business and you are an accountant, and your friend started asking you a lot of accounting questions, and all of a sudden your friend was so impressed that, hey, can you be my accountant? So do you claim that as a business expense or not? Now, your original intent of inviting your friends wasn't really to sell anything to your friend, but what happened is that you end up spending a lot of time talking about your business. So what happened is that you end up footing the bill because you know pretty much that your friends are going to become a client in that scenario. Because you pay for the meal expenses, it becomes a relationship building event, so it became a business lunch. So there's a lot of scenarios when you become a business owner, inevitably you will have a lot of these questions that, hey, can I deduct this? Can I deduct that? Can I deduct this or that? The best way is you check, whether is it ordinary, is it common in your industry? If it's not common, then is it necessary? So at the end of the day, you have to substantiate that it's ordinary and necessary.
The business expenses you are able to deduct under current IRS regulations are salaries and wages, such as the compensation you pay your staff, rent payments, such as your office rent, as long as it is not unreasonable, insurance premiums, including for fire, storm, theft, accident, or other similar losses, interest on business loans, which is limited to 30% of the business's ATI unless the business totals $29 million or less in annual gross receipts over a 3-year period. Taxes, including state and local taxes directly attributable to the business, such as income taxes, employment taxes, SE tax, personal property tax, real estate taxes, sales tax, excise taxes, and fuel taxes, with limitations. Home office expenses.
Now, there are some gray areas, or there are some common areas that people are confused about. Should I claim home office expenses? Am I gonna be audited by the IRS if I claim home office deductions? The answer is no. If you work from home and you actually have a dedicated space that's regular, that's exclusive, regular meaning you use the space at least 10 hours per week. So that's about like 500 hours per year. You use it regularly and it's exclusive. Exclusive means it's not your dining table, is not your bathroom, or is not your living room, or is not your bedroom. So it's a dedicated office space. Now in that scenario, you should claim for home office deductions because it is allowed by the IRS rules and regulations. Now there are 2 ways you can claim for home office deductions. The first method is called the simplified method versus the regular. Simplified method means that you tell IRS how many square feet is your home office And then you have all the way to 300 is the limit. And for per square feet, you claim $5. So you do the math, it's 1,500 maximum. Now, if you want to maximize your deductions and you want to be very detailed, you can use the regular method. The regular method is that you have to specify what is the square feet of your home office, your home, what's the percentage, and what are your direct and indirect expenses.
Depreciation of business property, including buildings, machinery, and equipment. Repairs and maintenance, as long as they are routine and do not improve the property. Advertising expenses, office expenses like supplies and postage, utilities for electricity, water, and gas use in the business, employee benefits, including health insurance, life insurance, and retirement plans, professional fees paid to accountants, lawyers, etc., education expenses to maintain or improve required skills, auto expenses using the actual method or mileage method.
Another struggle that business owners have is the auto deductions. There are multiple ways to claim for auto deductions. You can use the mileage method or you can use the actual method. So in a scenario of actual method, you claim, your gas, your repairs, your maintenance, your car wash, your toll parking, you can always claim that. Depreciation of the car, so on and so forth, that is actual direct expenses, that you incur for business, travels. Now, under that scenario, a lot of time business owners get frustrated that why is it that you ask for a mileage log when I am claiming actual? Let's say if your repairs is going to be $5,000, the IRS will not let you deduct the $5,000 just because you use your business credit card to pay for it. The substantiation is BUP. What is BUP? BUP is business usage percentage. That simply means that if you drive 10,000 miles per year on your vehicle, how many miles can you substantiate that is business related? Are you driving your car to visit a client, a vendor, a prospective client, your colleague, your co-workers, so on and so forth, your suppliers? Now, if you do it for business purposes, obviously, it counts towards your BUP. If it is not, then it's personal. So any portion that is relating to personal use is not deductible. Hence, whether you claim mileage or you claim the actual method, you still have to maintain mileage log.
Bad debts closely related to the business when they become partly or totally worthless. Amortization of certain business startup costs and other intangibles. Charitable contributions, as long as they are made to a qualified 501c3 nonprofit. Legal fees that are ordinary and necessary expenses to operating the business. Employee achievement awards with certain limitations. Business gifts limited to $25 per recipient per year, subscriptions to professional journals and trade publications related to the business, software and online services used in the business, telephone and internet services used in the business, and 50% of the cost of business meals, as well as business travel expenses, including meals and lodging.
The next thing that I want to talk to you about is one very common areas of audit is business meals, business travel. When you go for a meal with your clients, it's considered business because it's done for business purposes, is to build relationship with the client. But if it is $75 below or $75 above, regardless, you need to document a meal log which specify who, what, when, why, where. Why did you go? What's the purpose? And who's the name of the client and where did you go and when did you go? So it is a meal log. It's like a mileage log, but it's a meal log. The meal log is to show and substantiate the purpose, of your business meals. It's the same thing for travel. You might travel to another city or another country, but the IRS does need to know the duration of your trips. What is it for? Who did you meet? What's the purpose? In order for you to qualify that as a travel expense. So you need to be able to substantiate, whether it be minutes or emails that you have communicated to clients or suppliers, you will need the proof to do that.
So what are you not able to deduct? Strictly, the IRS does not allow for the deduction of personal expenses. That is why it is so important to separate your business and personal finances. But there are additional expenses that are not allowed, such as bribes and kickbacks, entertainment expenses, lobbying expenses, penalties and fines you pay to a government agency because you broke the law, and of course, personal, living, and family expenses.
So thank you so much for watching today. Business deductions is really a very critical topic. So many business owners are often confused about what can I deduct, so hopefully you will find this video beneficial. In addition to that, I do want to recommend that you also check out our website. We will be publishing and introducing detailed implementation guidance of how you can maximize deductions. So if you can check on the link below, I'll strongly encourage that. Outside of that, I really hope that for those of you who enjoyed this video today, please like, share, subscribe, hit the bell notification, because my team and I will very much appreciate it. We put in so much efforts in this channel, developing meaningful content for business owners, not because we want to monetize it. Our hope and our wish is that sometimes IRS rules, regulations, and the tax laws are so complex that we hope that by developing this channel, it can help many business owners like yourself. So if you know any other business owners or friends who are running businesses that would be able to benefit from the sharing of this channel, I strongly encourage that you share this with them. Outside of that, I would also want to encourage each and every one of you, if you want to understand more about tax planning tips, strategies, how do I reduce my tax burden, I encourage you to read this book, How to Grow Your Wealth Through Tax Planning. You will find this very relevant. It's 16 chapters and it will help you tremendously in the upcoming year. Thank you so much for watching, and we will see you next time.